Welcome back to the deep dive. Today we're zooming in. Really focusing on a very specific tactical slice of the housing market. We're talking about the $600,000 to $800,000 price point, specifically in Tarrant County, Texas.
Right.
So this isn't some broad national average. This is about the hard, actionable data you need if you're maybe a high-earning professional or a downsizer in places like Fort Worth, Hurst, Bedford, Euless, or Arlington.
And that specificity is so important because if you're in that price band, what we'd call the affluent segment there, the whole game has fundamentally shifted.
That's so.
Well, seller equity, it's holding pretty steady, but the inventory, the number of homes for sale, has shot up, and that's changed the entire competitive landscape.
A real paradox, isn't it? It feels like just yesterday was a seller's market, period. Now it's much more cautious, much more buyer-centric. For some, that's a huge problem.
It is. But for others, for certain move-up buyers, it actually creates a rare moment of leverage.
Okay, so let's unpack that. We're going to dig into the raw data, figure out what's really happening, and then, this is the exciting part, we're going to look at an innovative tactical response, this smart buyer advantage that's being used right now to beat that inventory surge.
Let's do it.
All right, let's start with what you called the data shock. You mentioned a contradiction, prices are stable, but buyer activity is really cautious. Where do we see that most clearly?
The clearest signal is in closed sales.
Yeah.
The numbers are, well, they're pretty stark.
Okay.
Year over year, closed sales dropped a staggering 22%.
Wow, 22%.
Yep. We went from 844 transactions down to just 658 at this specific price point. It just confirms that fewer people are actually closing the deal. The urgency we saw, 18 months ago, it's gone.
A 22% drop in deals closing is huge. Normally, you'd expect prices to just crater after that, right? But that's not what's happening.
Exactly. And this is the most fascinating part of this whole thing. Despite that huge drop in sales, the median price for this segment, it only edged down 1.2%.
Only 1.2.
It's sitting at $677,153. So the big question is, if demand dropped by nearly a quarter, why didn't prices correct by, say, 5 or 10%?
So why is that price stickiness so strong? Are sellers in Tarrant County just refusing to budge on price?
It's a bit of both. In this segment, sellers often have more of a financial cushion. They're not, in a position where they have to sell.
Right, they're not under duress.
Exactly. So they're choosing to either hold their price, protecting that equity, or they just pull the listing off the market entirely rather than chase the buyer down with price cuts.
So the pain isn't showing up in the sale price. Where is it manifesting?
It's showing up in time. Look at the days on market, or DOM.
Okay.
Homes are now sitting for 53 days. That's up and up sharply from 41 days just a year ago.
That's a 12-day increase. And that's not just a number on a page. That has real-world consequences, financial and emotional.
It absolutely does. That's an extra 2 weeks of mortgage payments, utilities, HOA fees.
And just keeping the house show ready for that long.
Yes. It signals a bit of vulnerability to buyers, and it's just draining for the seller. 2 months is a long time to live like that.
And the reason for all this anxiety is just the sheer amount of competition, I'm guessing.
Precisely. The driving force is this inventory surge. Months of inventory is now at 5.5 months.
And anything under 4 is usually a seller's market, right?
That's right. So we are now firmly in a balanced market, and it's even, starting to tip a little bit towards the buyer. The total number of homes for sale is 5,464. That's up 7.3% from last year.
So to sum it up, for someone listening in Arlington or Fort Worth, you have more competition, and the buyers who are out there have way more options. The power has definitely shifted.
And we even see that caution in the showing activity. Showings are basically flat at 3 per listing. That's down just a bit from 3.5 last year. So buyers are looking, but they're taking their time. They are not getting into bidding wars anymore.
Okay, that brings us to the strategy part. This shift isn't just good or bad. It really depends on what your goal is. Let's break down what this data means for the 2 main types of homeowners in this $600K to $800K range.
Let's start with the move-up sellers. These are the professionals who are leveraging the equity in their current home to buy, say, $1 million plus property. For them, this market creates what's being called a rare advantage.
Explain that. If they're selling their own home in a slower market, How is that an advantage? It sounds like they'd be leaving money on the table.
It does look that way at first glance, but you have to look at the whole transaction. So yeah, maybe they sell their current $750,000 home for, let's say, $5,000 less than they hoped.
Okay.
But at the same time, they're buying into the higher end market, maybe the $1.2 million range, which is feeling even more inventory pressure and has even softer prices.
So the discount they can negotiate on the bigger purchase is much larger than the concession they made on their sale.
Exactly. The differential works in their favor. They might sacrifice a little on the lower end, but they gain much more negotiating power on the bigger, more expensive home. When you net it all out, it's a significant win.
That's a really crucial distinction. It's not just about the price of your sale. It's about the cost difference between the two homes.
Precisely. Now, for the downsizers, it's a completely different story.
Right.
They're trying to capture that equity they've built up over years, and that value is still strong. The median price proves that. But the rising days on market is a huge threat to them.
Because they want to cash out, get a clean exit, and probably make a non-contingent offer somewhere else.
Correct. And for them, that rising dawn means their strategy has to be flawless. The margin for error on pricing, on preparing the property, has shrunk to basically zero.
So if they overprice it even by a little bit,
If they miss the mark by even 2% on day one, that home could sit for 60, 70 days. Then they're forced into a deep price cut later, which just erodes that equity they worked so hard to build, especially in areas like Euless and Bedford. Flawless execution is everything.
okay, so if you're a seller and inventory is high, buyers are cautious, and you know that big price cuts are toxic, how do you stand out? How do you win when a buyer can just look at the next house on the list?
It really does become a positioning game. The old playbook of just listing the house and waiting for the phone to ring, that's obsolete.
So what works now?
The homes that are winning in this 5.5-month inventory environment, they have a whole suite of advantages. We're talking about a strategy that combines, premium presentation, razor-sharp strategic pricing, and marketing that targets the exact right buyer.
It sounds like a lot more than just putting it on the MLS.
Oh, it is. It's also about transparent negotiation and having what are called buyer capture systems. It goes way beyond what a general agent might do. It requires a really nuanced, data-driven approach for every single listing.
And intense local expertise.
Absolutely. This is where firms that are hyper-focused on this specific Tarrant County market, like Local Realty Agency mid-cities, really shine. They're using this kind of localized data to build measurable systems that make a listing pop.
And I know one of the owners there, John Baptiste, who's based in Bedford, he's specifically identified this exact problem. How do you get buyers excited in a crowded market without just slashing the price?
Correct. And that focus is what leads us directly to the aha insight for today. It's this program they developed called the Smart Buyer Advantage.
Okay.
It's an innovative strategy designed specifically to get more traction and shorten those days on market, all without the seller having to immediately drop their price.
Which is the default move, right? When inventory goes up, everyone just says, cut the price. This sounds different. So explain the mechanism. How does it actually work?
The core idea is to shift the focus. Instead of reducing the home's value with a price drop, you make the cost of owning that home significantly lower for the buyer through structured financial incentives.
So you're making that specific home a better financial deal than the competition, even at the same list price.
You got it. It brings more motivated buyers to the table.
So if I'm a buyer and I'm looking at two identical $700,000 homes in Hurst, why do I pick the one with this program? What's in the savings package?
It's a layered combination of things. It's specifically structured to be more valuable than just a simple price cut. It bundles things like negotiated seller credits to cover closing costs.
Okay.
Incentives, if it's new construction, lender-paid credits that can be used for things like temporary rate buydowns, escrow refunds, and this is key, an exclusive post-closing rebate that's offered through the program itself.
So when you stack all those things together, what kind of savings are we talking about for a buyer in Tarrant County?
From what we've seen, the reported savings can range anywhere from $3,000 to, in some cases, $15,000 or even more. It depends on the specifics of the deal.
$15,000. That is substantial. That completely changes the financial picture for a buyer.
It does.
And for the seller, what's the big win? They're protecting their list price, which helps their neighborhood comps, but they're getting the buyer traffic they need.
That is the core value proposition. The seller's home instantly becomes a higher value option. It protects the list price while using these strategic incentives to lower the buyer's cash to close and their monthly payment. It's how these specialized agencies are managing to shrink the days on market even when competition is rising.
That's fascinating. They're turning a market liability, too much inventory, into a competitive strength.
That's the move.
This has been incredibly insightful. The main takeaway for me is crystal clear. The $600K to $800K market in Tarrant County is just not forgiving anymore. It really demands these data-driven decisions and innovative strategies, like the Smart Buyer Advantage, to win over these cautious buyers.
And that need for data applies to buyers, too. If you're looking to make a move in this segment, you need to know where the buyers are actually concentrating. You absolutely need to get your hands on something like a buyer hotspot report to see where the activity is before you make a move.
This brings up a bigger final question for me, thinking about the whole housing market. Given how successful a program like this seems to be in a very specific competitive price band, how quickly will this rising inventory force real estate strategies everywhere else to pivot?
You mean, will this pressure to protect seller equity finally force the entire industry to move away from just using the blunt instrument of a price cut?
Exactly. And instead move toward these more creative, structured incentive packages? Will we start seeing this for, $300,000 homes and $1.5 million homes, offering things of lender credits and rate buy-downs as standard practice?
It's a fascinating dynamic to watch. Tarrant County might be leading the way on this.
It's definitely something to chew on as you think about your own market, a critical shift to watch.
For sure.
Thanks for breaking down this complex data with us. We'll catch you on the next deep dive.